Good afternoon, ladies and gentlemen. Welcome to another edition of Focus on Liberia, the marketplace. And once again, we're here this Saturday in Los Angeles. I'm reporting from there, but our headquarters is in Atlanta. But we're making this a national one today. We got people all over. We got someone from Texas, and I believe, Larry, you're from the East Coast, and Gabriel is from the East Coast as well. So, gentlemen, we're covering everyone. We got the 12 a.m., we got the 2 p.m., and we got the 3 p.m. spot. And once again, on our show today, what are we going to be talking about? We're going to be talking about personal finances 2.0. And we believe we have the right assortment of guests on our show to talk about that. And so we want you to sit tuned and just relax. And we're going to be in for a great show. Take a break from the politics. As you know, us Liberians, we're not just one-dimensional. We love politics, but we're also multifaceted and multi-talented, and we got the right mix of people on our show. Before further ado, let me just take a second and read our disclaimer. The content is for informational purposes only. You should not construe any such information or other material as legal, tax, investment, financial, or other advice. Nothing contained on our media or written document constitute a solicitation, recommendation, endorsement, or offer by Focus on Liberia or any third-party service provider to buy or sell any securities or any financial instrument in this or in any other jurisdiction in which such media material may be shared. All content on the site is information of a general nature and does not address the circumstances of any particular individual or entity. Nothing in the media constitutes professional or financial advice, nor does any information on the platform constitute a comprehensive or complete statement of the matters discussed or the law related thereto. FOL is not a fiduciary by virtue of any person's use of or access to our media content. In so many words, ladies and gentlemen, this is just plain and simple. If you're going to make any financial decision, we advise that you consult with your personal, professional, licensed financial advisor. And don't say, oh, the folks from Focus on Liberia told me to put my money somewhere, because we don't want to get in trouble for that. So with that being said, today we're talking about personal finance 2.0. We got quite a bit of things to cover today. We're going to talk about type of investments, stocks, bonds, annuities, real estate. We know that there's crypto out there too. How to start your investing. How much money do you need? What are some of the more exotic ones, like the exchange traded funds, bonds and stocks, and so forth. And so as we begin this show, let's jump right in. Gabriel, share a little bit about yourself, a few minutes about yourself, and tell us just at a high level, what is Personal Finance 2.0?
Yeah, thank you. And Alex, Larry, thank you guys again for joining you guys. It's a pleasure being here. Actually, I don't know if I need any introduction. I think I'm a regular here. I work, for sure, I would tell people that I work in banking for the last 7 or 8 years. And that's what I've been doing. So, yeah, I think that's just about me. That should be enough. And what we're going to talk about today, I think we cover the personal finance. First one we did was actually 2 weeks ago, and I think we skipped the 2.0 because we had a urgent topic, which we supposed to do last week, but we end up skipping that. So this one is, as you rightly pointed out, we're going to go a little further into that, in terms of what I call the exotics, like the EFT, the Bitcoins. I have my reservation about Bitcoin, but again, I call myself a vintage millennial, so I don't like to. I don't get involved in those things quickly. So I'll let y'all to piggyback on that. We're going to talk about bonds. I like bonds very well. We're going to talk about stocks, and hopefully, I think we might get into real estate and annuity. So it's a handful of topics. Hopefully, we will have enough time to touch a little bit on each and every one of them, and offer our advice, or not advice, but opinion. And and as I said, we like this show to be interactive. So if we say something you don't like it, counter that. We ask your question, and we will take your question and learn from you as well. So that's enough about me, and I think I'll pass that on to the rest of the guys to introduce himself.
Thank you. Alex, go ahead. We'll leave Larry the honors last.
Yeah. Again, this is Alex Cuffy. I mean, my background vary from accounting to public financial management to auditing. And over the past 7 years, I've been involved with anti-money laundering. So I work in the banking industry, regulatory industry in the U.S. I started off as the head of the financial intelligence unit in Liberia for 5 years, and I'm in the States doing the same work. But in addition to that, I'm the managing consultant of Allen Bernard International, a management consulting firm where we provide business support services, accounting and taxation services, as well as we have the anti-money laundering services piece. We have an office in Liberia where we provide public financial management services. In the US, we have an office in Minnesota. We have an office in Texas. So that's where we are today. We'll be talking about what? Investment. Larry.
Hey, thanks to the Focus on Liberia family and my fellow co-host. The saying money is in everything, but money is a pretty good start, you know. Money essentially runs everything. And personal finance is that, it's that sort of the key that turns the engine. So once you understand a little bit about investing, a little bit of personal finance, and we know there are challenges in the country, we'll talk about it as well. But mainly, my background has been in investment banking. I've worked in investment banking, and I'm still in banking, but on the commercial side. Also in technology as well, and I'm an instructor. So I teach finance, economics, project management, and some other technology courses. So yeah, I will bring technical as well as practical experience to the table, and I see some of the guests have already throwing some jabs out there. So, someone is saying Mila Larry Kennedy. I love you too, Agatha. And you talk about Robinhood. Robinhood isn't really a stock. Robinhood is a place where you can go to purchase anything from what the gentlemen are talking about, like ETFs, stocks. It's an investment platform. So we'll talk about things like Robinhood as well. Okay. Back to you, William.
Thank you very much, Larry. I see that you know how to take some punches from our loyal fans here.
I went to high school in New York. I went to high school before I left St. Patrick's. I came to middle school in New York City. I lived in Harlem. Come on, man. We roll with the punches. Like they say in Brooklyn, forget about it. We can handle this stuff, right?
Right. So let's start with this type of investments. Cash equivalent stocks. Stocks and bonds. Tell us a little bit. Who wants to take a stab at it? Saving some money, got some money in the bank, feel good about it, but inflation is kind of hitting me. Is that something that I should just keep it there, or what do I do?
So
let me just take one, then I'll pass it over to you real quick. Okay. So it's important before we even, and I like the disclaimer that William put out there. What William is essentially saying with all the legalese, don't sue us. We're only here sharing information, but please don't go say, hey, I heard William saying it. If you want to sue anybody, sue Alex. Don't sue me. Just want to put that one out there. Be cool with it.
Yeah, but if you want the real advice and the real work, then you come to Allen Bernard International. You come to
There you go.
Real slick. Nice. Keep that up. And you'll be slipping through the Sierra Leone border too. All right.
I'll be slipping through Oklahoma. I'll be going back to Minnesota.
Nice.
So on the stock side, and I like the fact that someone mentioned Robinhood. We'll talk about that. That is so important because I tell a lot of the students, look, you don't need a whole lot of money. Even if you got like $100, you can pick up a stock at Robinhood because you're buying what is called a fractional share. Folks, it would be extremely difficult to break it real down without getting a little bit technical. But my co-host then will hold my feet to the fire. But in every financial system, there are 6 parts to it, right? You have money. So important. Once you pay somebody with money, it's done. I don't owe you anything. You don't owe me anything. You also have financial instruments. Financial instruments are sort of a way to move money from people who are saving it to people who want to take some risk and invest it, right? Then you have the regulatory agencies. And this is the biggest challenge in Africa. We don't have the regulatory agencies. Like when somebody steals money, it's hard to kind of take them to a commercial court or to get conviction. In other economies, I'll say like Ghana, Botswana, those guys are pretty good. If you steal money, they would grab you. More than likely, they would throw you in jail. In America, we know they have prosecuted Liberians who have done crimes in Liberia, got away with it, came to America, pulled similar stunts in finance, got busted, and threw their butts in jail. Then you also have financial markets. This is a place like what Agatha said. You can go to things like Robinhood. You have the stock exchange. There's a stock exchange. There's a regional stock exchange in West Africa. Botswana has a stock exchange. South Africa has stock exchange. This is where you can go to buy and sell stocks. So equities is like if I want to start a company, and this is so good because if you want to start a company in Liberia, you can raise money by giving people a little bit of share in your company. That share in your company is referred to as an equity. They own some ownership. It's like a stock. So say, for example, I need $1,000. I have a brilliant idea. My idea is I want to take soap or I want to take palm oil, use it in some ingredient to make cosmetics. I don't have all the money. So what I can do, I can come over to William. I can come over to my man Gabriel, over to Alex, and I say, look, listen, I need $1,000, right? I only got $250, but I want to sell you shares in my company so we all can be partners. So what I'm doing is I'm selling them a stock. And a stock is what they call like an equity. They will have part ownership in my company. There are a couple of ways you make money with a stock. When a company do well, the value of the company goes up. The investment will also go up. If they decide, okay, I no longer want to be part of his company, I want to sell my share or my stock, they can sell it to somebody else, get their money. That's another way you make money. So stock is just part ownership in a company as well. And we'll talk about ways how you can actually buy stocks and other things like that. So I will flip it over to Mr. Alex if you want to talk about equities or one of the other instruments as well.
Yeah, great discussion there, but so I would pivot it from the point where we started with savings and all that, and the last time, and we try to differentiate between savings and investment. So savings, savings is the one you do every day, whether you want to save for emergency or you want to save to pay off debt or whatever. But they're all cost savings, and but investment, like Larry said, is more for long-term purposes and things like that. So, but there is the common investment, which is more like savings. Savings investment is cash equivalent. So, for example, if you're talking about your money market instruments. So, like treasury bills, certificate of deposit, your CD accounts, where certificate of deposit is for a period of time. You can put money down for 90 days. You can put money down for a number of days, for 120 days, and then you get it back. You can reinvest, but it's all about the interest rate. The interest rate is a little bit higher, even though stay low, but it's a little bit higher than the normal saving, which you get everything below 0.1% or so in the normal saving. But in this one, you could get 0.7, 0.8 up to 1% or a little bit more. But then there are other types like the commercial papers, the marketable securities, and the short-term government bonds. We'll come to talk about bonds. So, say for those who are looking for getting away from the ordinary savings that we talk about, like the one that is tied to your bank account, where maybe you do a compulsory withdrawal, you set a limit you can do with $500 every pay period or 1,000 every pay period, and say it goes into a savings account, and you have overdraft protection, which protects your account just in case you forgot, you didn't have the balance, and you spend some money, and it comes directly from your savings account. And then also that kind of savings is used for what? Maybe your car breaks unexpectedly and you have to repair it, or you can do it for project reason. You have some project to do, you have maybe moving relocation expenses, or you have a big program coming up and you want to do that. But then you want to go above that now, so you want to go into savings for specific reason. Some of the things is it's good to take it away to different banks, maybe a credit union or somewhere else where you can get a little bit more interest, and of course for the security sake, the appetite that you will spend the money right away or it's tied to your bank account, but you put it into, there are different banking institutions that kind of encourage on those kind of investment, if you may.
Thank you very much, Alex. Gabriel, I want you to talk about bonds. What exactly is what is a bond? How is it different from a stock? And yeah.
Yeah, thank you. And I think so. The way I want to describe bond is actually it's categorizing the fixed income securities, right? So what I mean by fixed income, so if a bond is literally an IOU, either from a government or it could be issued by a corporation or entity, if you want to say, right? It's pretty much an IOU, right? That it's fixed, right? The rates on that are fixed, right? Typically from the government, it could be uh, a year, 5 years, 10 years, 20 years. The traditional ones are actually 30 years. The same thing for corporation, right? So companies, at one point, GE did issue bonds, right? Back in 2013. So companies do issue bonds as well. So the coupon on those, we call it coupons. Pretty much those are the payments that you get every year. So if a government or entity or corporation issues that to you, you buy their bonds, right? You give them money, right, and they pay you a certain percent of interest every, depending on the terms of the duration of the terms of the bonds, right? So it could be, every 6 months or every year, that is fixed. It doesn't change for the terms of the bonds, right? So that's why it's actually considered a fixed income. Usually, I call it slow money because usually the payments on those are usually cheaper. Um, so from a governmental standpoint, government issue a lot of bonds, right?
Mhm.
The U.S. government, when they want to, do either tapering meaning that if they want to ease the risk of inflation on the market, or if they want to do quantitative easing, right? So they issue a lot of bonds in those areas. But most of the bonds that we usually talk about that you might typically see, that most of us from a what I want to call average man standpoint, are usually issued by corporations, right? And I think those are the one that's savvy investor, what I call savvy investor, will actually buy, right? So that's typically what a bond is. It's pretty much an IOU that is either issued by a government or by a corporation, and the payments on those are typically fixed for the duration of the bond. Um,
Okay.
right.
Now, my understanding is that with stock, it's different from a bond because a bond doesn't necessarily give you ownership into the company, right? Versus a stock, you're going to be buying ownership into that company, correct?
Yeah. So with bonds is actually a debt. I think
Right.
that's the best way to describe it. With
Mhm.
stocks, you have ownership, and with a bond is actually a debt. So at that term that debt is paid off, you have no ownership in the company, not at all. So what you
Okay.
get for investing is the interest rate, or what we call coupon payment, that you get every 6 months or every year on that. So it's typically what I call a debt. It's a debt.
Okay.
Yep.
So now that I've kind of got, we've went through to an understanding. So how does one start investing? How does
So
one start?
let me before you get to
Yeah.
what, so let me relate this to the bond to Liberia. It's a basic point because I was a kid at that time when the government issued what they call saving bond, right?
Right.
To my, I mean,
Go ahead.
they issued that to my father. Even though I don't
Make
think
sure you put some deodorant on.
Well, you're still on, right?
so.
Sorry.
Yeah, so they issue all these papers to our parents. Our parents kind of paid money for those bonds, but they didn't pay. They didn't pay that back. So when, for example, when one political party, backup mafia political party, came in to register the party, they collected those saving bonds, those papers, those certificates from a lot of parents, and took them in to use it as the money to register the party. So so Gabriel said, it's a debt. So government issue, like Central Bank of Liberia issue bonds to kind of crowd source funds from
Yep.
from the
Citizens.
public,
Right. Public.
sort of to turn around into the bank to rebuild confidence and talks like that, like what the central bank is doing in Liberia now.
Mm-hmm.
Okay. Good. So thanks. So Larry, we have this. How do we start? Right. Someone mentioned right, really
Robinhood.
accessible into the market, Robinhood. But tell us how does one start? What are some of the starting steps?
But before you,
So,
Larry,
yeah,
excuse me,
go ahead, Alex.
before you start, okay, some of these things that we are talking about is like the stock, the bonds, but there are some things that are there's some investment that are purposefully for long term, more long term,
And
things
short
like
term.
annuities, real estate. So there is the 401k. There is those other type of investment for retirement that
Right.
maybe Larry you can throw some charms on when it comes to annuities and real estate before we go to how you invest.
Yeah, and I see my brother Joe Manu is here as well. He throwing some good questions out there, and I think we'll post some of these questions. How do you start? So I would look at it from the Liberia perspective, and I'll look at it from the U.S. perspective. So from the Liberia perspective, I'm going to do the government of Liberia a big favor. Okay, I'm gonna pitch something for them that they haven't been very successful at pitching.
They could use that.
So you see, we have personal finance. So I guess this is your home. So it's personal, right? It's our home country.
That's funny.
You just couldn't resist. Go ahead.
So here's the thing: if you're in Liberia, it's difficult to just take your money, put it in the bank because of inflation. You're not going to earn a whole lot. So let's say you're in Liberia, you got a few dollars, and you want to put it in something to invest to get some money back. What you can do is you can buy CBL bonds. Not just any CBL bonds, because of inflation, CBL bonds doesn't pay a whole lot. So how do you make your money? Gabriel went through it. How do you make your money? You're lending somebody the money. They will pay you interest. And then at the end of at the maturity date, they will give you back your principal. So say, for example, the government of Liberia wants to borrow $1,000. I'll go in and buy CBL bonds. The government of Liberia will pay me interest, and usually on bonds, interest are paid twice a year, semi-annually, right? Every 6 months, they will pay you interest. You collect that. Every 6 months, you collect that. And then at the end of the year, they will give you back your $1,000. So the money you make will be the interest you collected. Now, if you put your money in a regular bank in Liberia, you're not going to make a whole lot of money from it. But you don't just buy any regular CBL bonds. What you need to buy is something called an inflation index bonds. The CBL has it as well. What does that mean is inflation right now, I know they are selling inflation at 7%. When you buy something, let's say, for example, you have $100. If inflation goes up, your $100 will not be worth $100. The things you can buy for $100 today would be you buy less of that. With the CBL inflation bonds, when inflation go up, the value of your bond will go up as well. it would measure it. So inflation is 7%. You will always have that $100 to buy a $100 basket of goods. Inflation goes up to 10%. Your bonds will automatically adjust to give you extra money for inflation. So the CBL has something called inflation bonds. Here in the US, you can start by going to a website. There's a website called Treasury Direct. It's a US government website. You go to Treasury Direct, you can buy US inflation bonds. It's called TIPS, Treasury Inflationary Protected Securities. It's on this website called Treasury Direct. So why do you want to do this? You got to put money away for a rainy day. Stuff happens. If we weren't on Focus on Liberia, I would use the word that we normally use on Wall Street, right? So I'm not going to do any cussing yet today, but stuff else happens. So you want to invest a little bit for that rainy day. You don't want to put it in a regular bank. You want to just buy. If you're young, you put it in stock. And I see someone mention something about Walmart. Great. The sooner you put it in a stock, don't try to just sell it the next day. Over the long run, statistically, over the long run, you will make money. If you're young. If you're older, you want to get into a bonds because you want to save your money that you currently have. Stocks is a little bit more risky because it goes up and down. It fluctuates a lot. Bonds is a little bit more secure, but don't just go buy any old bonds. If you're in the US, you don't want to buy what's the video store that went out of this Blockbuster. You don't want to buy like a Blockbuster bond, right? Because that's garbage. That's junk, like what Joe Money was talking about. But yeah, you get started in two ways. Number one, if you have credit cards right now where you're paying 14 to 20% interest, don't go buy a stock. Pay down your credit card because the interest you're saving from that credit card, that 14%, you're not going to earn it right away in a stock, right? Sure, the stock might appreciate, but pay down your credit card. Still, if you have the ability to put $100 in a stock, a great place to start, like what Agatha's going to be my best friend of all times. You'll go to a place called Robinhood. You can take $100, go to Robinhood, and you can buy a little small share of Apple. You can buy a little small share of Alphabet, which is Google. You can buy a little small share here and there. And that's how you get started. You get started by first looking at your bills, taking care of your credit card debt, and then taking a small portion and putting it in. You can go to Robinhood, you can go to Treasury Direct, you can go to your local bank, if you and they will open up an investment account for you. If you have the big money like Gabriel, then you can go to like Charles Schwab or one of the other guys. And you have really, if you have that kind of stupid money like Alex, then you can hire a financial professional, but for the poor people then like myself, I would go to Robinhood. That's how we get started.
The opposite.
Exactly.
Yeah, back to you, William.
Well, thank you very
we
much.
Throw some of the comments up there. We can kick this off.
Definitely. And as we look at some of the comments, you mentioned something about $100, right? Ameritrade, you might need a little bit more, but tell me, is it realistic? $100? What should I really do in terms of how much money should I look at to get started?
Yeah, let's say you have $100. Let's say you have $500. So where do you start putting your money? Right now, everybody is locked down in COVID. So if you want to put a little bit of, by the way, you want to do something called diversification. Don't put all your eggs in one basket.
Yeah.
Alex has a business, William has a business, Gabriel has a business. I will put something in each one of their business. So just in case, Alex decide, okay, he's going to retire, he closed down his business, at least I will still have some other investments. So you want to spread it out, right? You want to look at the sectors where you think next year or the year after they're going to do well. I would look at things like pharmaceuticals. Pharmaceutical is doing great right now because of COVID. So if I want to put a little bit of money in Moderna, Pfizer, I could go to Robinhood and buy a fractional share. I can also balance it by putting money in the travel and the airline, because when everyone gets sick and tired of COVID, eventually this sector is going to Exactly. So you want to buy it, so you're diversified by putting percentage. So I got $500, maybe I put a quarter of that, 25% in pharmaceuticals. I can put maybe another 30 in technology. Technology is open. Well, I know Facebook suffered a massive drop in their stock.
Yeah.
But don't panic. But you want to kind of spread your money out in different sectors. If technology is doing bad, gold would do well. If bonds is doing bad, gold is also like an offset to bonds. So yeah, you want to diversify your portfolio.
Thank you very much. So when we're looking at tools, can you talk about? There's Eugenia. She says, "I want to invest, but I don't know where to start." So where the first starting is it? Hey, take a look at Robinhood and Ameritrade. Put some money in.
Yeah, I would say I think Larry actually touched on that. So Robinhood, right? Or you go to your local bank. Depending how much money you have, right? They will usually, depending how big the bank is, they have investment advisors there. That's if you don't want to do it yourself. I think Larry talked about technology as well. So right now, what we're seeing is a lot of robo advisors, right? These are done by machines, AI, where they can actually pick your own portfolio, right? You just put the money in and you choose that robo advisor. So they will pick a diversification of a portfolio. This is all based on your what we call risk averse, how much risk you want to take, and it will invest that for you. But I think those are good places to start. You can do Robinhood if you want to do it yourself. There's Ameritrade, E-Trade that Morgan Stanley just bought, right? There's Vanguard, there's T. Rowe Price, and those people usually have free advice there. Like the platform, they have a lot of tools. If you want to even do what we call technical analysis to see how this stock is doing against this one, or if you even want to look at what we call sector stocks, like if you want to just look at real estate, or if you just want to look at technology, they have great tools on there that you can look at, and it will give you a good indication. Now, this is if you want to do it yourself. If you don't want to, they also have people that you can talk to. Say, hey, I'm looking at investing. I don't have a financial advisor. Can you guys help me? Right now, they will assign you somebody, or they will. You have the option, as I said earlier, to pick a robo advisor, depending on how much money you have as well. So I think that should be a good place to start. But as we said on the previous show, you always need a CPA, and if you have good money, depending on how much the fee is, you also need a good financial advisor. That's if you're looking at a long-term standpoint. If you're looking at a long-term play, so I'll leave it right there.
Thank you.
Gabriel, when you mentioned the last show, so I'm gonna add to what you said going back, right? So the first thing you need to do is to Eugenia, is to assess your own financial situation. All right.
Thank you.
Like we said the last time. So you know how much is coming in and how much is going out, right? And then once you do that, if you have a budget thing where you do the budget and you know how much you can save, then you will know, say, okay, you differentiate between this is your income, this is how much you're getting, these are all your expenses. Then you look at the debt you owe. So you also got to make sure, like Larry said, if you're paying on a credit card that is sucking out 18%, 24% from you, try to pay that down through saving, like I talk about the regular saving account, and putting and bringing that debt down. Then anything that is left, and the question is, how much do I need to save, right? So you also, it can be $100, it can be $200, it can be $500 if you have $1,000 from something, or if you prepare your taxes instead of being a tax-free and running somewhere and just blowing that money out. You can say, okay, this amount, I can start with this amount. So that's an advice to people who are doing taxes and getting good chunk of money. I mean, if you have other things to do, you can do it with that money, But again, if you're thinking about investment, you can do like you said. Now there are two things. So I'll tell you a little story. Back in the day, I think 2002 or so, I'm working. I just walked through the Skyway, walked to my banker, and say, I want to start investing.
Mm-hmm.
So they say, oh, go talk to somebody. So you, like Gabriel said, you go and talk to somebody can sound. But in these days, you can do a combination of the old school to go and talk to somebody, or just go search online where you can. And Gabriel mentioned some other places that you can put some money down.
Yeah.
So you can also go online, right, and do all these online stuff, Robinhood, Robostock, and all, you can get all these advices. But if you also need, reach out to somebody and talk to the person, pick up the phone, call and seek some advice, and the person can give you some direction as well.
Yeah.
Thank you.
Let me say this real quick, Eugenia. I would say I'm sure you do work, right? Your workplace do have great resources. Wherever they have your 401k, you can just pick up the phone. Say, hey, I do invest with you guys. My 401k, my employer, we have a 401k with you. But in addition to that, I also want to do investment on the side. Let's say, and you can talk to them about your strategy, right? And they will sit down with you. As I said, my favorite are Vanguard and T. Rowe Price, right? Because with Vanguard, I've dealt with them. They have great tools that they will even, like, pretty much they will give you an advisor without you even having to pay for it, right? And in addition to that, they have what we call the robo advisor. And if you don't, you can play around with the robo advisor. If you don't like it, you can say, you know what, I'm getting tired of this. Talk to a person, and they will help you with that. But I think wherever you have your 401k will be a good place to start as well. Yeah.
Thank you very much, Gabriel. I was actually going to mention that as well, about the 401k. So thanks for chiming in on that. We just want everyone to know that sometimes companies do match. And so we should take advantage of companies that have a matching for your 401k. As we move
And
forward,
before you move on, let me say it also depends on your age, right? If you're a millennial, then you can play with all these different stocks and stuff. Your risk adversity is so. But if you are in your 50s or in your 40s, so it depends. If you are in, because some of us, you're looking at more, okay, my risk tolerance is not too great. So at this stage, if if you're in your 40s, late 40s or 50s, early 50s, or going on, you can say, hey, my risk tolerance is very low, so I can do the aggressive thing. I would do the secure thing where, sometimes you do 51% stable and 49% aggressive, where even if you fail in the 49%, you still have your 51% stable, and that fund is sitting down there for you. So it depends on your age, where you are. If you're millennial, then like Gabriel, then you can go into all these aggressive stuff. But if you're like me, then it's time to think about how to be more careful.
I'm a vintage millennial, not just a millennial, but a vintage one, an old one. All right. So I'll put that out there.
Okay.
So let's talk about EFT, okay? And what I want to do, Larry, is I want to bring this to you. Tell us what EFT is a little bit, and then also look at this comment from John, and let me know what you think about it in your response as well.
Can you put a joint? Okay.
Yeah. So while you ponder that question, Larry, let me read this comment from John. It's from John. Where are you if in the U.S. Vanguard is a good place to start with ETF? But before you start investing, make sure you clear out all your debt except the mortgage. Then save enough money as an emergency fund for, say, to cover all expenses for, say, 6 months. We did speak about that in our Personal Finance 1.0. Once you've got your emergency funds and no debt, including credit card, then you need to start investing and access money to go, as keeping in the bank doesn't create wealth for you.
Yeah, but before Larry start, let me, and Gabriel, before you get in, let me go back to I always go back to our first lesson, if you may, about, so that's exactly what John can put it. Please put it back on a.
And I think Larry talked about that too in terms of.
Yeah, that's what Kuningwe is alluding to, and he's alluding to a lot of things that even Larry will talk about, and some of the things we'll talk about here. Like I just said, you have to have a plan. That's what he's saying. You can't have all these credit card debt or all the different debt, right? Then the necessary debt. I was having a conversation with one of my friends. Told him, my friend, I ain't like to take car loan, but if you have a mortgage to pay, that's a necessity, because for the mortgage also you're building equity, right? In a house, the money you're paying every month, you're building equity, and then the housing prices increase over time. So you're also getting equity with the increase in the prices of the houses. So that's in this sense, even though these days, with all this inflation, it's a difficult market right now, but traditionally it's a good place. Car, you get, it's a necessity because it's taking you to work and it's bringing you back, it's making you to earn that money. So if you can avoid car note, avoid car note. Like me, I ain't like to pay car note. I'd like to hold the money and go buy the car. But if you cannot avoid car note, yes, then you can hold that one. But all other debt, like Conway is saying, try to set up all your debt, try to save some emergency fund, like we said, in your savings account. That kind of fund, don't keep it in the same bank you have your current account. Keep it somewhere else, maybe a credit union bank or some other bank that has, or online, these online banks that have, better interest rate, for your emergency funds before you talk about the investment, the kind of aggressive investment you're talking about, like Larry said. So Larry, over to you, or Gabriel.
No, Larry.
I just wanted to add that.
Yeah, the comments over here, they're deep. The comments are deep. And I don't want to miss some of them because I think it was Joe Money that mentioned other types of investment. Here's the important thing. There are two types of investors out there. You have investors who are savvy, meaning they understand all of the financial instruments and they can go out, do their research and invest on their own. And then you have another set of investors who have some money they want to put away, but they don't have the financial background to make some of these decisions on their own. So what can you do? How do you start? Again, I don't want to go too far back, but Joe Money mentioned something as well. If you're not the investor who has all of the requisite tools or do the research and all that other nonsense, what you can do is you can invest in mutual funds. Mutual fund is a type of investment where you are in, let's say I'm interested in investing in a mutual fund. This mutual fund invests in technology stocks, right? So it will buy maybe a little piece of Apple stock. It will also have in this basket of investments some Alphabet, which is Google. It will have some other tech stocks in there. Then all I have to do now is take my little 100 or 200 or 500 or 1,000 or 10,000, and I can buy that mutual fund. What it does is it offers some diversification. You don't have to do all of the hard work. So you can invest as a mutual fund. Now, if you are the person who able to do the research and you want to invest on your own, yeah, definitely. Then, you can go ahead and do your research and invest on your own. But again, bear in mind, if you doing like a day trading or you're just buying for wait 1 week and sell it, you're not going to do so well. Jeremy Siegel, professor, I think over at Penn, did this paper a long time ago, said in the long run, over a period of 10, 15, 20 years, stocks eventually will do very well. It will go up and down. I mean, if we could share a screen, I can take you over to the Federal Reserve Bank Economic Data Bank. It's called FRED. You can go in there and take a look at a stock, and you can see over the long run how well it does. You want to buy some Coca-Cola stock, and I love the Coca-Cola family. Definitely go and take a look at Coca-Cola on FRED on FRED. You can look at any of these stocks and see how well it does over a period of time. Another thing that I'm seeing is, so ETFs. What are ETFs? Back in 2007, 2008, when JP Morgan took over Bear Stearns, I was sent, and I've been with the firm so long, I was sent over to join the Bear Stearns group over in New York in an area called the Stock Borrow Loan Department. What we were doing, ETFs, exchange traded fund. It's like a mutual fund, except all they're doing is they're buying a basket of, they're trading, like say on the S&P, the Standard & Poor's. Yeah, they're only trading on a certain exchange, for example. ETFs, and they have different types of ETFs. They have iShares, they have, and we used to call it like power shares called Qs and all that stuff, but it's more for the sophisticated investor, the people who understand the market. If you have money and you want to put it in something, your 401k is a great place to start. Your 401k will invest in sort of like a mutual fund. 401ks don't usually invest in individual stocks.
Yep.
Now, I see someone mentioned Teachers Insurance, TIAA CREF.
Yep.
Same thing. You can put some money in like a mutual fund or some of those things that it will reduce your risk because it's diversified. But not all of them are well managed. So you have to pay very close attention. You have to read something to see how well this fund has been doing. If you don't read it, you can end up putting your money in a mutual fund and you're going to end up losing your money. I know someone mentioned that, hey, don't invest money that you can't afford to lose. Well, true in a sense, but not all investments are losing events. Again, if you've aged 50 or older, you want to put some money away, put it in like a treasury bond. Why?
Yep.
Because the U.S. government is not going to default. The U.S. government, and every time the U.S. government at risk of defaulting, they raise the debt ceiling. So if you're 50 or older, you don't want to take too much risk, put some in a government bond, and then you can put a little bit in stock. So your portfolio can be like a 70-30, 70% in bonds, and then maybe 30% in like a stock. And still, it can be a mutual fund to reduce your risk. And there's a lot of other great things. Yeah, I see I got to putting some great thing out there. Jackie's putting some questions out there. So yeah, we'd love to discuss that, but I don't want to hog the time. So let me swing it back to William.
Thank you very much for that.
I'd like to, William, before you go there, I'd like to just, there, are you guys hearing me?
Yeah.
Yes.
Mm-hmm.
Hello?
Mm-hmm.
He probably
you got a lot to say. You
like I
got
said,
a lot
I
to
had
say
a-
on this
There's
stuff.
problem-
Alex
having
got a
some
lot to
technical
say.
thing.
You,
there's
Larry, I think you're right. This is the money guy
Yeah, there's
because
a
he got a
problem
lot to
with-
say.
He gave
Oh, look,
himself
someone is
away,
talking
right?
about
There's a
Easily.
problem with it.
Someone talking about Roth IRA. Yeah.
No, but I have the electricity glitches here because of the weather thing. So, Fred, I have a question. There's a question here. Achimo Frederick is asking: is it possible for one to retire in Liberia and yet still have access to the retirement readily? I think he meant the retirement fund. I think so.
Like he mean here, or I think
No, you retire
he
in
mean here?
Liberia.
Yeah,
but
if you
can still
have your
access your
retirement
money
funds
over here.
here, and if you retire in Liberia, do you have access to your funds
Oh,
from here?
definite.
I would think so. I would believe so. And that's, from a personal standpoint, that's a conversation I'm, having with my mom as well, as she looks to retire maybe a few years from now, right? Yes, you can still retire in Liberia, whether your Social Security or your 401k or whatever other investment you have. You can still have it here and do a sweep to a bank account there in Liberia, right? I think it should be easily done without, given that, I think we have sophisticated banks in Liberia that would be able to allow that sweep from here to the banks in Liberia.
Yeah, but they shouldn't pull that stunt where one day you show up and they say they don't have money. Yeah, they shouldn't pull that stunt. But yeah, you are absolutely correct. You can retire in Liberia and then set up instructions for your bank for a periodic withdrawal and automatically deposit it to your account in Liberia. But I want to say something real quick before I forget.
Wire transfers, and you can have your card. But again, you can also have them like in the case of Social Security, it can be directed to Liberia.
I knew go to the ATM and pull it out.
No, but I knew some folks who were receiving their Social Security, I think, at the U.S. Embassy or at the bank. I think Echo Bank or so in Liberia, who were getting the actual check and cashing it over the counter cash, But you can have access to your funds as well. You can keep your funds here. Depending on the way you set it up, it can transfer into your current account. You can still have access to it through wire transfer, through ACH, and things like that.
Let me say something real quick before I forget. Something that initially we were talking about, and it crossed my mind. Years ago, I know in Liberia, years ago, some of the companies then used to give their employees like stocks years ago. I can remember, I don't know how long it was, but my father-in-law had some stocks in some iron ore mining thing from Liberia years ago. And he came and he said,
NIOC, I guess.
right.
Is that how you got rich?
That's where he got his loot from. And he came and he said, I want to know if this thing still has some value. And I actually looked it up, and it did have some value. And it did have his information in their system, and he was able to liquidate it. So there are people who their parents probably had some investment stocks or something from years ago, have no idea. The thing is, let me give you something you should do if you haven't done so. The banking laws over here, after your money sits in a bank and you haven't touched it for a while, it goes through a process called S-sheet. It goes down to the state. If you haven't done it, you should go and pop your name up in the state database and see if there's money in there for you. You probably had it in a bank account a long time ago, and you never touched the account. Right. So all these banks then, they do have. One time I even did it, and the Liberian embassy has money in different banks in the U.S. Like, I couldn't believe it. Go in there, like go to Washington, D.C., one of the banks over there. You pop in the Liberian embassy, and it will show that they have money in different banks. Their money in different banks. So just wanted to throw that out there.
No, I think that's great information.
Yeah.
Yeah, Agatha is buttressing the point here. She said, I most often send money from my account or debit card through RIA, this money transfer thing, to UBA, where no one will eat my money, which is very good. So it does exist.
Who wants to take a stab at this? From Emmanuel Jackson. Is there an institutional investment company in the U.S. associated with diaspora and offshore investment in Africa legitimate to do business with?
Well, the great thing about when you set up your company over here as an institutional company, you fall under federal regulations. So sure, there are some fraudulent companies out there given, but there's a high probability that it would get caught and it would go to jail. So a lot of them try to operate on a legit basis. So whether we have, and when he says institutional, that simply means rather than individual, it's more of a company-wide investment vehicle. Emmanuel, I'm not aware of an institutional company over here that does offshore investments in Africa. And again, Africa is so tricky because of illicit financial flows, because of money laundering. There's so many things. And when you work in a bank, when you try to do wire transfer to Africa, there's so much anti-money laundering hoops you have to jump through. It becomes extremely risky to do a lot of business in Africa, right? And some of you guys here, like Alex and Gabriel, you guys are well aware of the anti-money laundering, illicit financial flows. But yeah, to answer your question, Emmanuel, I'm not aware of a company like that.
I think that, I don't know, there could be, I probably forgot, there could be something existing in Ghana like that. Well, anyway.
And there's the question with crypto. So we'll come around to that. Yeah, go ahead, William.
Oh, you want to, okay. Answer this and then we'll bring up the one for crypto. What about Roth IRA? Your thoughts? This is from O'Neill.
Roth is a great way to kind of save for retirement. If you're working, the Roth is actually named after a senator from Delaware, right? What the Roth IRA does is the investment comes out of your salary before you get taxed. The key to the Roth IRA is try not to touch that money before you hit a certain age, because you will end up paying penalties because taxes is not being withheld, right? So when you touch it, you have to pay the taxes and then you can get hit with penalties. But you can still take the money out for emergencies. Say you have medical bills or you want to maybe buy, but you have something you want to pay on an emergency basis. Yeah. But Roth, again, if you're working for a company, take advantage of the 401k. If you have money you want to put in like a Roth IRA, great. IRA stands for Individual Retirement Account. Definitely. Another great place to start is your company 401k. If you can afford it, max out the 401k if you can't afford it, right? Otherwise, put something in there. Most companies would match you. There's no such thing as a free money, but that's as close to free money as you will ever get.
Mhm.
Thank you very much.
Yeah, like that. Let me just buttress that point. There are penalties on these retirement account, whether it's 401k, whether it's IRA. There are penalties on that. So you take money out, you probably pay the penalty and the tax, because so you know, this whole idea about borrowing from your retirement account, your 401k, yeah, it's there. You can do it, but they will hit you. But when you're taking money from your 401k and your IRA, just make sure it's for something that is dying, or you will invest in something else to bring you a better return. But taking money from your IRA for other expenses and things like that, or traveling to Liberia and things like that, people do that, but I would like to discourage it.
Thank you very much. This says from Harris TK Johnson. What you guys think about investing in cryptocurrency? Gabriel, I know you on the side with this one. You don't know much about it, but
yeah, as I said earlier, I'm old school. I think I take a lot of the cautionary approach to it, but I know in terms of the technology, like the blockchain, a lot of banks are adopting the technology in terms of blockchain, right? But in terms of me personally getting into it, I have to be honest, I haven't even gotten any, not even Bitcoin. But I know there are some central banks that are adapting, looking to create their own cryptocurrency. So I think that signals a sign that this will eventually be embraced by central banks. And the reason why I think it's not heavily regulated is because they haven't really adopted the framework yet from the central bank side. And once they do, they will become, regulated, and I think it will become more popular with people. But for me personally, for now, I've still, kind of cautionary approach to it. So I'll leave it on that.
Yeah, I mean, maybe Larry will come in, but because I'm in anti-money laundering, so I'm a little bit kind of careful. So yes, I share the same thing with. It may not be a bad thing to do, but I share the same thing. Treading on the side of caution, because working in anti-money laundering, cryptocurrency thing is high risk for us. So once we see cryptocurrency investment, we kind of, our tentacles kind of go up. We start, that stuff. So in that vein, until probably, I don't know whether when central banks or regulators start taking it on and setting up regulations for it, stronger regulations for it, maybe at that point. But personally, I agree with Gabriel there in terms of on the personal side. That's not investment advice, but on the personal side.
Yeah. Larry might have a different view. Larry,
you need to have a strong stomach if you want to invest in cryptocurrency.
there you go.
You're going to go on a roller coaster ride. You're going to go on a roller coaster ride because cryptocurrencies can jump in thousands. It's a digital currency. It's not money in the sense of money, because money has three main definitions. It's a unit of account, it's a store of value, and it's a means where we can use to exchange. Crypto is not universally accepted. Not everyone would accept crypto as a means to settle debt or to buy stuff. So it's not money in the sense. People are looking at crypto because they believe it's the future. In fact, China has their own, it's called the, I think it's called the yuan, the Bitcoin yuan or something like that.
Yeah, I think
and it's over
like
245. Yeah, exactly. And there's over 245 million people subscribing to it and using it. But I don't know if they're doing it out of their own free will. That's China now. So, anything is possible. But yeah, if you're going to invest in crypto, I would not suggest it to anybody who is not savvy enough to do it. But it's great if you have the money. You know, you can buy a Bitcoin. Great, absolutely. Sure, when it hits the high, you can sell it, dump it. But it's not for everyone. It's not for everyone.
No, the reason why I think I took the precautionary approach is because I don't know if I have taken that precautionary approach, but I do follow it, right? And if you guys remember Dogecoin, right, a cryptocurrency that was started as a joke, right, got so much attention that everybody was on the crypto bandwagon, and now where is it? Like you said, to get into that, you need to have the stomach for it, right? It was volatile. It was trending high. I think Elon Musk actually said something about it. So everybody and their grandmother jump on it. They were investing in it, and this is a thing that was started as a joke, and I don't think people really understood that aspect of it, right? So again, it lost its value. So now I think the only credible one that I would say is, has proven its worth is, Bitcoin. The rest of them, I think they're just
Yeah.
right. The rest of them they're just like very highly volatile, and you got to be careful. You have to be very, very careful which one you got into, because I think there are a lot of them that are being started right now. Like as I said, Dogecoin was a joke that started and people got on it. I don't know if anybody made money in it, but I know a lot of people that I follow on Facebook were putting money into it, or were bragging about this thing. Now you don't see anything about that, so be very cautious about that.
The mayor of New York City, he gets his salary in Bitcoins, and I think Messi over at PSG, I think he gets part of his salary in Bitcoins as well. But so, I mean, for me personally, I believe Bitcoin is going to be around for a very long time. I believe digital currency is going to be around for a very long time. So if you have that long time span, you want to invest in it, great. Look at M-Pesa, for example, over in Kenya, digital currency.
Right.
I can remember a long time ago watching 60 Minutes. I couldn't believe it. If you had invested in M-Pesa, the company, years ago, you would have done extremely well, because it is widely accepted now in Kenya. They led the way in Kenya with M-Pesa. They led the way with digital currency before the U.S. started picking up on it.
Yep.
Because when Ed Bradley, who did that interview on 60 Minutes, when he said, wait a second, we don't use digital currency in the U.S. like that. Yeah. I was like, whoa, so it's going to be around for a long time. If you have that time horizon, you want to invest in Bitcoin, absolutely, pick up a fractional share of Bitcoin.
Yeah, let me pick on some comments here. Haruna Keita said you can take a loan from your IRA and will not pay penalty if you pay back the money. Yeah, I mean, I don't think it necessarily like somebody said, you not necessarily penalty. You will pay the tax portion because it's money pre-tax dollars. So when you take that money out, now you got to pay the taxes that you're supposed to pay. But if you pay the money back, then you may not incur the penalty, not the penalty, but the taxes. But sometimes when you take the money out, they will calculate the tax first, and they will say, for example, you have an extreme emergency, you have $25,000 in your IRA or your 401k. And before they send you, I think the 401k, they may not take if say you take $10,000 from the 25,000, they may not take the taxes up right away. They will take the taxes up at the end of the year when you're filing your taxes or something like that. But the IRA is some of that. They would take the penalty off. I mean, they would take not the penalty, but the tax off. And some of those accounts, they could take a penalty off before they'll give you the change, right? So if you say you want 5,000, you might end up getting 3,800, 4,100 because they will take the taxes off, and there's a little charge that they take off from there before they give you a change. So yes, for the IRA, and then I think Freddie was asking.
Let me add to that. Let me add to that before you. So I think what is it? Haruna is saying, she's right. So you can take it out as a loan, right? You can borrow against your 401k, like literally borrow as if you're borrowing from the bank. It's like you're taking money from your bank. You will pay the interest, right? They will charge you interest rate, but that money you'll be paying it back into your 401k. there's no penalty, there's no taxes withheld. They won't take any taxes from there. Yeah, so you can actually do that, but that money that you're taking
I
out
think
should
there's a
be
10% penalty or something, some percentage. I mean, the
at that.
interest.
You don't right. If you take it out as a loan to yourself, right, you
Mhm.
don't have to pay that 10% penalty or even that 20% penalty from the Fed, right? You don't have to do any of that. That's if it's actually a loan where you have to pay. So literally, it becomes a loan that you're borrowing. It's like you have your own bank, but you're borrowing from yourself, and you have to pay yourself back plus the interest on that. So you can definitely do that. I think that's what she actually meant.
Okay. So
Yeah.
then Achimo is asking, does one get penalized for transferring from a 401 to a Roth IRA? I don't think so. It's like you're, say you have a 401k with another company and you're moving to another company and you want to roll over. They call it rollover. So yes, you can roll over without paying any. I mean, there's no penalty, there's no taxes. All right. So then Asabi is asking, what if my company don't issue 401k? Should I open a separate investment? Because I don't think I would benefit if the company is not matching. Gabriel.
I think she works for a company that doesn't offer 401k. That's unusual, unless it's a very small
No,
company.
it's true. It's true.
Right.
So
Unless
it's true. There are companies who don't offer 401k, or they don't, yes, there are a lot of companies don't offer 401k.
right. In that case, what I would advise is you open a Roth IRA yourself and then max it out to whatever maximum amount you can put in there. That's if your company isn't offering 401k, open a Roth IRA and max it out to the and just max it out.
So what in my experience, what I've advised, especially some people that work in the nursing field, that work with these different companies, whether it's Group Home or whether it's something which they don't offer those things.
Right.
There's a tendency to advise them based on their financial situation. There's a tendency to advise them to open a mutual fund account, where maybe they put $75, $125 every month, and over the years it grows. But before you and it pays. It depends on what the investment people, where you put the money, it grows a little bit good.
Yeah.
Right.
Yeah.
So
safer. Right.
yeah, I have an experience with one particular person. When I saw the statement, I said, "Oh, the money is growing! Wow!" And the person just had 5,000 there after investing for a short period of time, over 12 months, and the money has grown from this amount to 5,000. And I said, "Well, this is something good. We should continue doing it. You should continue increasing even the amount and you're putting there, because it looks like over the next 5 years." You probably could have 25,000 in that account, right? So yes, so there are companies, entities that do not offer 401k.
Let me piggyback real quick on something Alex just said, which is so important when it comes to investing. That's the technical term is called dollar cost averaging, right? What Alex just said is, you need to invest, but you need to invest periodically. You need to invest. You need to have a schedule. So if I'm buying a stock or something, let's say every 2 weeks, I would buy another small portion of that stock. That's why you do your 401k. But the reason why you do every 2 weeks or so, every month, you buy into it, because when the price of the stock goes up, sure, you'll buy a smaller number of shares. When it falls, you'll buy a greater number of shares. In the long run, it will average itself out, but you're going to make more money. Dollar cost averaging is a great tool in investing. You invest every 2 weeks or every month, but the same amount, you will kind of see your money will grow quickly. If you want to know how quickly, let's say you plan to retire at age 39, like my man William over there. He's a young guy. He wants to retire early, right? There's a quick tool you can use. It's called the rule of 72. You take 72 divided by the interest rate that you think you can earn on your money, and it will tell you how long it would take for your money to double. So you got $5,000 at 6%. You divide 72 by 6%. It will tell you how long your 5,000 would double. That's just another quick, rough way to kind of figure out how your money can grow. It doesn't take into account the fact that, hey, maybe you're doing this dollar cost averaging, putting a little piece here and piece there. But something Vaughn said early on, what about investing in real estate, right? What about real estate investing? So I'll swing it back to Will, and maybe we can talk about investing in real estate also.
Thank you. So, I mean, when you talk about real estate investing, it can, we can have like a whole nother show on that, right? Because it just covers the whole shebang. But
Yeah, that's next Saturday, but throw some
yeah.
light.
But when you look at it, real estate for investments, you can invest either through stock. There are companies like REITs, real estate investment trust companies, that you have an opportunity to invest in real estate without actually going out there and owning maybe the entire building. A REIT basically is an assortment of investors come together and they're investing into real estate. And by law, every year you have to disperse X amount of dividends. So that's REITs. Right now, there's also private placement companies that are available for non-accredited investors, but you have to really know the market. It's a little bit more of like a niche. It's a little bit more of a higher risk because it's not easily liquidated. So you really have to kind of understand that side. So those are two pieces. And then thirdly, you have to understand if you're buying a property to consider your home where you can live, or if you're buying something that you want to invest in it and put tenants in. And I think oftentimes you have to, as someone wanting to invest, you have to make that maybe make it very clear, because the tools or the assumptions or the attitude or the mindset that you would take as an investor to invest in real estate is different than if you are taking it to say, hey, I want to own this home, I want to live there, and regardless of what happens, whether the market goes up or down, this is my home, I really love it. And so most folks make the mistake. They think that they want to buy a home, they want to live there, but then they turn around and say, well, this is my investment. Two different things. So those are just little pitfalls that you got to be aware of. But entering in it, look up real estate stocks, right? Look up real estate REITs company. One of them is Vornado. I remember Vornado is a real estate company that invests in an assortment of commercial properties throughout New York City. And so they've been around for a little while. So yeah, folks, we got to tune in for another time to talk about the real estate side. But yes, you can invest, you can buy shares of stocks in some real estate companies, and you can trade it.
Perfect.
So let's start. We've been on here for a while now, hour and a half almost. Time is far spent. We've had so much comments
Somebody
here.
asked me a question on, they said Fidelity and Robinhood. In fact, it's Flomo Livingstone. Fidelity and Robinson, which one is good to invest into?
Well, I think so. I will leave this comment, but remember that Fidelity and Robinhood, those are in so many words, it's a marketplace. It's a place where you can access many other stocks and bonds. So just keep that in mind. So so keep that in the back of your mind. But I'll let the panelists speak to it a little bit more.
I'll take 30 seconds on that. The word good is subjective. How do we define good? Because good to someone who has very little money, want to get started, Robinhood may appear to be good. Good to someone who has the ability to pay financial advisors. Fidelity may be the place for them to go. So it all depends. The question is kind of open to interpretation in terms of what is meant by good. So it's a kind of difficult question, Flomo, but I appreciate the question you put out there.
Thank you. All right, let's so summarize. Gabriel, please start with you. Closing comments, thoughts.
No, I think from a I want to look at it from an overall perspective. Whether you're looking at investing in bonds, real estate, stocks, even
Gabriel,
annuity. I don't think.
Gabriel, before you continue, the Haruna asked a creator, there's
I guess we got to comment. Well, I don't know if we want to put that up there.
there's a difference between a loan and a withdrawal. So,
Yeah,
okay,
that's what I was talking about earlier. So a loan, if you
401k, right? Gabriel, we seem to have just. Go ahead, Alex. Can you pick up until we get Gabriel back? I think that's the issue with his connection.
Yeah, loan. If loan. If you take a loan, like Gabriel said earlier, if you take a loan, that's money you're gonna pay back. So you're borrowing for yourself with an interest, so you put back. But withdrawal is you're taking the money from there altogether, right? We're withdrawing from your 401k or your IRA, which attract the taxes and the if there's a penalty, the penalty. Because if it's a 401k, that 401k you got to understand that it is meant for retirement, and there's a law surrounding that you only quote unquote entitled, if entitled is the right word, you're supposed to take it out when you reach a certain age of retirement. But now you have not reached the retirement. That's why companies are putting that money in there before they calculate your tax. So if you're making $2,000 in a month, they take out that money. All right, they take out that maybe that $100 and they calculate the taxes on the rest. So you did not pay tax on that money. So when you're taking that money out as a withdrawal, right, which you will not pull back, you have to pay the tax that you were supposed to pay, and then the penalty for early withdrawal, because you're taking that money from there before you reach that 60 plus retirement age. That's the penalty, right? Yeah. So there are two things you will pay if you withdraw. But if you take a loan, you will only pay back the loan plus the interest, because it's like you're calculating the interest. You got to pay back the interest. So,
right.
Possibly, if you want 10,000 from there, they could collect that interest and give you the change. Then you have to pay back that change, or the other way around. Other you require. But let's assume if you are unable to pay that money, right, back to in a given time, then they can tend to withdraw. Then you may be slim with those the taxes and the interest.
I know we're winding down, but can I take 30 seconds on that whole question on insurance?
Yeah, that insurance, I was going to bring it back.
Yeah, insurance is a great way to also, why do we take insurance, right? To kind of protect us against massive loss. For example, if in the US, if your state says that, hey, you no longer need car insurance, will you buy insurance? It's no longer mandatory. Yeah, I say 99% of the people still buy insurance because you don't want that risk in case you fall, in case you have an accident. If you're traveling to Liberia, how many people purchase medical evacuation insurance or travel insurance? Do you purchase Medevac insurance? Most people don't. And that's a huge risk. It only costs a couple of $100s or so. You can find medical evacuation insurance to get you out of there because the healthcare system is not the best in the world. But those are kind of things that we need to talk about. You can also buy life insurance, right? You have your whole life. You can buy life insurance. Well, make sure when you're buying life insurance, you don't have a shady family that realizes there's $500,000 on you. Be very careful with that, because you may not wake up one night or be carbon monoxide in your room. So just gotta be careful on that. But those are the kind of things you need to transfer risk from you who can afford it to someone who can definitely afford it. So insurance is another great investment vehicle to kind of protect you and your family from unexpected loss. So that's a great thing. So I know we need to wrap a wind down.
Right. All right. So I guess we're taking closing statements. All right. Can you guys hear me now? I hope you guys can hear me. All right. No, I think this was a great discussion. I think from the previous one we did, the first one, we cover a lot of topics here, the bonds, personal finance, the different investment platforms. We dive a little bit into real estate. I think what I would like to say here from, just a nutshell is that, it's all boils down to you, right? It all depends on your financial situation. If you want to invest, you first have to, assess your, how much debt you have, and be able either to pay down that debt, and then whatever you have to be able to invest it. But what I would recommend people to do, as I said on the previous show, if you're not comfortable with it, if you're too scared, if you're too risk averse, everybody has their own risk appetite, whether you're young or you're middle age, approaching that. Well, if you're approaching the retirement age, they have what we call target date funds, right? So they target it towards your age, where you can, as you get closer to retirement, the risk actually decreases as well, right? So all of that, if you're afraid, I would say talk to a professional. Talk to, first your CPA to make sure you have your finances in check. And then after that, if your CPA say, hey, we have a little bit of money here, you're doing well, good financially, let me put you in touch with a financial advisor to do that. That's if you're not savvy, right? If you're savvy, you can do it yourself. Go on any of the platform that we mentioned, whether it's Vanguard, Fidelity, Robinhood, E-Trade, and open an account. And I think one of the biggest thing that we said here, I think Alex was the one who said it, is that look at investing over time, right? What's called the, I forgot the name of it, where you can invest on a monthly basis, right? So you're not just investing, say in one ETF, but you're investing over time. Let's say every month you get paid, you put $100 there or $200 there, whether it's in an ETF or even a stock that you're looking at, or a sector, right? Have a long-term goal and make sure you stick to it. Make sure you stick to it and keep a good budget, because the budget will keep you in check to make sure that you continue investing from a long term. So I will leave that on there. I'll leave that right there. Thank you.
Thank you very much, Gabriel. Larry?
Hey, so thanks again, guys. Always a pleasure being here, having these conversations that have some value and benefit to the people. I would part by saying this. When I was in Liberia a while ago, I met a young man, Anthony, not going to mention his last name. He's a pilot, Liberian pilot, United Airlines. And he was telling me how he was investing in real estate in Liberia. I was amazed. He was investing in a Grand Cape Mount, and he was telling me how he was raising them, because you cannot get a mortgage in the U.S. to purchase a property in Liberia. You can't even get a mortgage in the U.S. to purchase property in Canada. I mean, unless you put down a outrageous amount. But he was telling me how he was doing it. It was fascinating. So there are ways to invest, but the reason why you're doing it, right, it may be to put away for retirement or to leave something for your kids or your grandkids. But you have to get started at some point. And the best way to get started, through a mutual fund, like Joe Monu raised early on, like what Alex was saying and Gabriel, through a mutual fund, maybe even through your 401k. It is so important. Like even maybe buying your first home. Homes are usually a perfect asset for retirement. Buy the house, pay it down. With real estate prices seems to be doubling overnight. Sure, the market will correct itself. Prices will dip. But if you hang in there in the long run, prices would eventually rise. So this is a great conversation. We can have these kind of conversations every day, because I love this kind of stuff. There's no mile or podcasting over here. We're all here to have a great time and share ideas. So again, my hats off to focus on Liberia. William for being a great host, Alex and Gabriel for sharing their thoughts. Always willing to learn something new. And thanks to you guys for being here. The people who are here placing comments. Absolutely wonderful. A great learning experience for me.
And I don't know if we mentioned that you will be with us regularly now, right? I don't know.
Yeah, you guys supposed to pay me $5 every appearance, right? You guys are on the cheap. You're on the cheap side. You only pay $5 per appearance. Come on, man.
No free ride, huh? No, thank you. Awesome.
Alex?
Yeah. So before I have my closing comment, Hiruna Keita wrote something which is my favorite, actually, the 529 for college fund, and I've used that ever since. And it's a great. I mean, there are other ones out there, but that's a great place to put money for your kids or your grandkids. Like I'm having grandkids now, so even though I advise the man to put something there, but myself too, I putting something there for the grandkid as well. So because when it grows, it's something that you can leverage. But thank you all to all our viewers, everybody in cyberspace that is listening to us, and everybody that is commenting. This is a great discussion. I see a lot of comments. But again, like we said, first of all, we will continue this similar topic next Saturday. We'll be looking at real estate and then possibly insurance. Again, we have the famous Prof. Larry Kennedy with us now.
Yep.
We'll be paying what 0.00% of
$5.
Yeah, $5 in Bitcoin.
Yeah, and we have our boy William King will be showing us regularly now, our great host. But again, and after this series of personal finance, then we'll go into more of looking at economic fiscal management issues of Liberia. This time we'll be looking at how to look at the issues, look at what we can put forward as a policy advice to whoever, to the power that be us, whoever. But then we're also looking at how we can leverage our collective knowledge and expertise to see how we can put things out there. So we'll be inviting other people who have expertise in fiscal management, fiscal governance, economic management, and how to grow the economy, how to expand our Liberia revenue base, whether it's through tourism, through agriculture. We will be asking people to come. And we want to have a panelist here in different topics because we lay out a series for a long period of time. So we are inviting different people from different backgrounds to come to approach us. I'm on Facebook. I have Messenger account. Gabriel is also there. You can contact, even the discussion we had today, you can contact myself. You can contact William, Gabriel, or Larry. And again, finally, assess your own financial situation. Do a budget, see where you are, pay off some of the debts that can be paid, and then start to save some money, start to put some money on the money market. Mutual funds is a great thing, and then start to look at the long-term investment. If you have 401k at your work, try to capitalize on that and take the maximum of matching fund if you can. If there's no 401k, try to open your own mutual fund or something like that and talk to your advisor. You can talk to any of us, we can advise you, and then we can direct you if you may.
Yeah. Thank you very much, Alex. Thank you very much, Gabriel. Thank you very much, Larry. It's so refreshing to see just a group of sound gentlemen from Liberia. And often when we go to certain places and they ask us, are you Liberian? And we so articulate and so forth, a lot of people are interested and they go and look up Liberia and they scratch their head and they're trying to figure out how is it that this country with so many intelligent people that help so many companies and entities and organizations grow all around, and then in the backyard, things don't seem to translate there. Well, that's for another day and another time. Today we talked about ways to invest. We encourage you, if you weren't able to share the show with someone, the show is going to be on Facebook. The show is going to be on YouTube, so you can go back and watch it. And please remember, whether you're in Liberia or in the U.S., we want you to invest. You can invest and save money, although the dynamics are very different. Because remember, at the end of the day, we are all Liberians, and we're working towards a common goal, promoting, elevating, educating each one of us about ways to get better. And this FOL is all about that. So, ladies and gentlemen, without further ado, we are all Liberians, and we see you next time.
We are Liberians. Liberia is our home. Liberian people. We want. Aula